Welcome back, my passive income investors. Today, I want to break down what risk really means, guys, because when I got into investing, I actually didn't understand this at all. So let's just jump right into this, guys. Anytime you make an investment, even if it's through a financial advisor, this is the spectrum when they talk about risk and risk tolerance, guys. So essentially, all risk really is volatility and how much you can actually stomach. So on this spectrum, we have the lowest rate of volatility, and these are the kind of companies that are more, you're going to find this more in ETFs, exchange traded funds. So essentially, let's take the S&P, for example. The 500 largest companies in the US get put into one fund. So instead of you buying into one stock, you're going to be buying into all of them as a whole. So if one of those 500 goes bankrupt overnight, you're probably not even going to notice it, to be honest. And you can get this through like the Vanguard 500 index. They all represent the S&P, and they have the lowest volatility, and the average rate of return on those is anywhere, I think, around 8 to 10%. And that is about the safest investment you can make. And it's also one of the benchmarks, like the Vanguard index funds and the S&P are benchmarks that all investors pretty much compare themselves to. Because if you can't beat the basic index, well, you're doing something wrong. So then moving on up here, getting into more volatile stocks, guys, if you're getting into picking those individual investments like, say, Apple, we'll put right here. If you were to buy Apple, it's not the most volatile company on the planet, but if you're buying it right now, you're definitely going to be experiencing the spectrum of volatility, guys. And can you stomach that when Apple does a $50 drop? Can you sit on that? Are you comfortable waiting when you see your portfolio drop by 25 or 30%? That is what this spectrum lives in. And then at the riskiest of spectrums, guys, we're talking about things like Bitcoin and the OTC markets, guys. So Bitcoin, OTC, if you don't know what the OTC markets are, they're also known as the pink sheets. They're essentially like the junk stocks that can move, penny stocks, essentially. They can move a couple cents, but if the stock's only worth 2 cents and it goes up 2 cents, you just doubled your money. Though that sounds appealing, at the same time, if it flips the other way, you could lose half of your money in an instant, guys. And that plays on this very wide spectrum of volatility and risk. Now, let me tell you why I never understood this fully when I got into investing, guys, because when I heard of risk, I thought of, and it was probably better that I thought of it this way, but I thought of it as risks the company has. Like, what is the risk of this company going bankrupt? Something like a bank stock might play in the middle of this spectrum, but in my mind, I always thought the risk was, well, if I buy this to hold on to it forever, what's the chances of this company going bankrupt? What's the chances of competition coming in and ruining it? What are just the chances of this company having issues or manager problems? It's like Warren Buffett says, the billion-dollar investor, guys. He's like, you want to buy a company that's so easy to run that an idiot can run it, because sooner or later there will be an idiot managing the company one day. So you want to make sure the company's pretty prolific and self-sufficient, guys. So that is when I got into investing. When I thought of risk, I always just, even with penny stocks, if I knew there was a penny stock but I understood what the company was, like again, Canopy Growth Corp, that biggest marijuana company, guys, or used to be the biggest marijuana company. I think there's one more bigger than it now. But that company, when I got into it, it was on the pink sheets, guys. It was an OTC stock, but I understood what it was and I knew what the company was building and what I was buying. So I didn't see the risk that somebody else might have saw. But now that I've been investing for quite a long time now, almost 5 years, I can't stomach the risk like I used to. I play in this middle spectrum here, guys. I only buy individual stocks, and my portfolio, it moves quite substantially. It can do 5-10% movements in a week or a day, guys. Like, it's crazy sometimes to watch the numbers move, but I've gotten comfortable with this. I enjoy this. I've seen the upside to this, and I kind of just get it. So this is generally where I live. When you start investing in stocks, everyone's going to tell you you're taking on substantial risk. It's a risky thing to do, guys, buying stocks. But is it really any riskier than you going to get a 5-year degree at college or university, taking out a 6-figure loan only to help and pray that you meet the right people to get you the right jobs to pay all of that debt off and get you a career that's going to take a decade to achieve? To me, that kind of investing is down here, guys, in the Bitcoin spectrum, because there's a lot of people I know that went to school, and more than half of them came out with debts, no jobs, and didn't really care about the degree they got. It's crazy to me that a student or an 18-year-old could take out a 6-figure loan with no education of money or the markets or anything whatsoever and go and get an education. But the thing is with those loans is they're non-default. You can't even pay them back, which is crazy. Sorry, you can't even pay them back. If you don't pay them back, they're going to stick with you forever. You can't default on those loans, guys. Those loans are with you forever. So getting a real education and taking out a loan for it, to me, lives on a risk level that is so far below this because it is with you for the rest of your life. The worst case scenario is one of these companies go bankrupt, you lose all of your money, whoop-de-doo. But with an education, guys, like, you can't walk away from that if you screw that up. So I always never understood why people said stock market investing was risky or gambling, because it's only gambling if you make it gambling, first of all, and the only risk is just how competent you are about the companies you're buying, because we're not buying paper, guys. The paper is where they get this risk spectrum from, is how much that paper dollar value moves, whereas to me, the risk comes in how stable is that company, what are their assets, do they have a lot of debt, because to me, a company having a lot of debt would be the risk, not the spectrum that the stock price lives on. So I always found this chart really interesting, guys. Let me know what you think in the comment section below about risk. How do you stomach your own risk? Do you live more in the ETF section of life, or are you down in the crazy volatile Bitcoin world, guys? But stay cool, stay awesome, guys, and don't worry, I might not be back tomorrow because tomorrow's the weekend. I have to perform. I got some shows going on. I am a full-time magician. In the related channels on my page, guys, you can actually check out my magic page. I haven't posted there in a while, but there's a lot of old videos of me performing. So stay cool, stay awesome. I'll see you probably on Sunday or Monday, guys.